Keep calm and carry on buying AI tech stocks as they deviate from the highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. The bottom line is that bear markets are supposed to be painful. I can tell many investors feel that pain from the comments as they post the latest price of, say, Intel or AMD or TSMC or any other stock trading lower, as if I have a magic button to press that can make the stock go higher. So if you're feeling the pain, then go read my earlier recent articles on the psychology of investing in a bear market, because bear markets are painful, with the degree of pain experienced depends on what time frame one is focused upon. I personally have yet to begin to feel any pain. Maybe it's a function of still being around 25% in cash. Maybe sterling dropping by over 15% has inflated my portfolio. The bear market is pretty shallow for me compared to, say, US investors. Though that is a double-edged sword in that it's become much harder to buy stocks during recent dips. My investing mindset is a function of the sum of all of my analysis. As a test for whether my investing mindset is reliable or not, go back to March 2020. As you'll all probably be well aware by now, I ploughed all of my available cash on accounts into tech stocks during that pandemic crash event. Before the worst, what was it, about a handful of deaths in the US at that time. So it's well before the worst of the pandemic ever materialized. And then flash forward to mid-2021, and I proceeded to start to sell my stocks portfolio all the way into their all-time highs, taking my AI stocks position down from near 100% invested down to about 20%, for that is what it took to satisfy my investing mindset. It's all there in my Patreon articles and on my website, The Market Oracle, and this YouTube channel. And then the bear market began as forecast by me and my machine learning neural net project. And the bear market began with sterling riding relatively high at around 136. I know from experience, bear markets tend to be accompanied with dollar strength. That is the bane of investing in US stocks. For when US stocks tend to be dirt cheap, then so does sterling. It happened in 2020. It happens every bear market. Go back and you'll see. Hence why I tend to cycle in and out of US dollars, that's cash dollars, to help mitigate some of this unfortunate state of affairs. As for hell knows what reason, all of the tax-free accounts such as ISAs and SIPs do not allow one to hold US dollars. Well, okay, there is one which does, II SIP, which I plan to open whenever I see sterling north of, say, 135 to the dollar. So what is my investing mindset right now? Well, it is to get to 85 invested as soon as possible. Bearing in mind that right now we have to contend with sterling at 115, so it's not easy to do so unless I see deep drawdowns in prices. Secondly, don't make the mistake of trimming too much. That is, what is trimming? Well, you accumulate hard when the stocks fall to new lows, and then when they rally, when you get the bounce like we did during August, you trim within reason. You maybe for a 20% gain, 30%, 15 to 30% in that range, depending on how individual stocks go. Anyway, you don't want to trim too much, because bear market rallies, because they could be off the final low. June. There's an 80% probability June was the final low. And this is not something I'm saying now. I've been saying it since June. And thirdly, AI tech stocks on average will be higher a year from now than where they are trading today. How high? Well, that's foggy without undertaking in-depth analysis, which I am, but I would imagine that AI tech stocks on average will be at least 10% higher than where they trade today, and possibly as much as 40%. But that's pending in-depth analysis that we first made available to patrons who support my work, so do consider becoming a patron by supporting my work for just $4 per month. And that's the state of my investing mindset right now. No pain, no fear, just eyeing the start of the next leg down that will hopefully take me further along my goal of reaching 85% invested. If in bear market pain, then invest and forget. If you're feeling the pain, just invest and then forget about it for a while and come back 6 months and you'll go, whoa, my stock portfolio has recovered its drawdown. And as for my stocks bear market target AI tech stocks accumulation strategy, and right from the outset has been to accumulate during this volatile bear market that targeted Dow 29,000 to 30k, where I settled as my best guess being 29,600 to be achieved by late August, in the course of which I was expecting a volatile swings of between 15 to 20% in either direction that would allow me to buy big during the dips and then sell a portion of, i.e. trimming, what I bought during the bear market rallies, as well as selective shorting. Fortunately, this bear market mostly turned out to be less volatile than what I was expecting, i.e. the swings higher of 9% are just not enough for any significant trimming in most stock positions, as this table illustrates. Then on top of that has been sterling's nosedive from 1.38 to the dollar to under 120, 115 recently, which means I have not been able to capitalize on the more recent dips to the extent that I would have done if sterling had not fallen below, say, 1.3 to the dollar, which is a good 10% difference in cost terms. On the flip side, this makes selling the bear market rallies a lot easier. So even though I saw this bear coming, it has not turned out to be an as easy bear market to profit from due to weak upswings and the falling sterling. And this video is just an excerpt of the analysis that was first made available to patrons who support my work on the 1st of August. Yes, you're getting it about 6-7 weeks after patrons got access to this analysis for just $4 per month. So do consider becoming a patron by supporting my work for just $4 per month, with my next mega analysis on the verge of completion by this Sunday that will seek to map out a trend forecast well into 2023, and early indications I could go into the end of next year. That will be a mega trend forecast, beating last year's September analysis, which covered the trend into the end of April, from September 2021 into the end of April 2022. So this will be even deeper analysis, extensive analysis. That's taken me a good 5 weeks. So do consider becoming a patron by supporting my work for just $4 per month for access to that and all of my forthcoming analysis, including all of my recent analysis that mapped out what to expect going into September and what's going to happen over the coming days and weeks going into October, including that there's an 80% probability that the bear market bottom was in June, which is important in guiding what one does when one is presented with the recent correction that's currently underway as I am recording this video. Analysis that concludes in a detailed 3-year trend forecast for UK house prices that was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month. And my UK housing market analysis will soon be followed by my even more extensive analysis of the US housing market that also concludes in a detailed 3-year trend forecast, which is at a time of maximum price uncertainty. Even the Fed does not know from one meeting to the next what they're doing. Barely days before the Fed hike rates by 0.75%, the chairman Jerome Powell was saying that 0.75% hike was off the table, which illustrates the degree of uncertainty out there. And also access to my most recent ongoing analysis geared towards capitalizing on this stock's bear market that I warned to expect last December. Capitalize on by accumulating AI tech stocks at deep deviations from the highs at target buying levels, which again first being made available to patrons who support my work, so do consider becoming a patron. I support my work for just $4 per month, gaining access to over 35 years experience, right from before the 1987 crash straight through to this stock's bear market that will ride the quantum AI megatrend into the future.